Good morning. This is Tom Alexander. It is Tuesday, October 19th. A very special day, especially in my trading history. I was trading in 1987 when we had a true crash, and I learned many lessons that day. Stories for another time. Some of you have heard them. Anyway, it's 8:15 a.m. Eastern Time in the U.S. on this particular October 19th day, and we are having follow through to the upside. The momentum to the upside is continuing. I mentioned that this could be the case, that we could see more upside today because yesterday, actually, and there's some irony in this, because breadth was negative yesterday. It didn't set up exactly uh, that the typical way that you see the divergence, the price breadth divergence thing work in an uptrend. And so now we're having follow through. It will be interesting to see when the cash market opens this price breadth relationship and how it behaves. Uh, let's just take a look at these one by one because I think this is a really important juncture in the market. So we're having this huge bungee jump off of this low, which is a follow through from the momentum low down here. And you can see we're trading above at the moment. We closed above and we're trading above this, the last little bit here of a key reference area potential resistance. And really the only thing left to the upside now of significance is the all-time high. Yeah, I understand there's volume over here, but at this point, you had conviction down. You're sort of in the elevator shaft phase of the decline that began back on the 3rd of September. So wouldn't be surprised to ultimately see a new all-time high. I think I mentioned this in the weekend report that it was likely that we would see the Dow get up into a new all-time high. So this is the next key reference area, is the all-time highs. Now, what would change that? Well, there's a general guideline that I've used for years and years and years, and this is true regardless of the asset you trade. It applies to gold, bonds, whatever you trade. When you're in a strong trend, and in this case an uptrend, it is the previous day's low or the low before that that is an initial heads up that at least the short-term top could be in place and you balance or you're going to get retracement, etc. So what that would do at this point in time, this is today's Globex session, but I mean, we already have enough conviction to the upside that this low is important. But the really important low now is yesterday's session low in each of the indices. This happens to be the Dow. If we go back to the ES, you are looking right here. So this is the most important level now. Let's take a look at the NQ, and we'll talk about the Russell last because it's its own special animal. Okay, here we go. So you can see the NQ, the low of yesterday and then the low from Friday are close enough together that that's one area. So if we were to close below Friday's low now, something would be awry. You can see the NQ has really not done the same work to the upside that the Dow and the EF have done to this point. You still have some issues with the NQ getting above here. Okay, now let's talk about the Russell for just a minute. And the Russell remains in this extraordinary balance area. We go over here and look at the profile view. This is where the Russell is trading right now. The Russell is trading as I'm speaking right here. So it's at the upper extreme of an extraordinarily mature auction of several degrees, going all the way back to January. This is all one auction, as you can see here. And then we've had a 3-month auction on top of that, and with the same high volume node. This is where we're trading. So the Russell is mired in balance at the moment. Going back to, here we go. But again, yesterday's session low is important in the Russell. Now, it would be extremely bullish in my mind for the continuation of the overall bull market in U.S. equities if the Russell were to suddenly take the lead, catch on fire, and trade to new all-time highs. Now, that would be quite a move from here. It would be 4%, but the Russell is one of these contracts. It can move 4% in a day and a half. Not suggesting that's going to happen. It's just a reason that I'm keeping an eye on the Russell, because it is going to move extraordinarily sharply out of this structure at some point in time. The general guideline when a contract is in such a mature structure, and this is true in any time frame, this happens to be an intermediate long-term time frame. The general guideline is to be favoring trades on the price side of the high volume node, meaning when that market is above its high volume node, you're in general favoring longs. When it's below it, in general, you're favoring shorts. Now, it's a little more nuanced than that, but that's the general guideline. Okay, let's take a look at something else that I think is important immediately in what we're doing here. Let's look at breadth on a 30-minute basis. Now I'm going to, you can see this is the momentum peak right here in breadth. Now this, guys, this is essentially a cash session chart. This is the ES futures contract, but it's the cash session chart. It doesn't show Globex. So yesterday, and I showed this in the chart that we used in the live room, what I have been looking for is I've been looking for the market to do this, the breadth to do this, and then price to do this. However, yesterday we never got positive in breadth. So at the end of the day yesterday, and you can go back and listen to the live trade room video that I send every evening, I said this. I said, look, I wouldn't be surprised now if we don't get another attempt internally at expansion, and that leaves room for this to move higher. And then you'd still have that potential divergence. Now this pattern can persist, and in strong bull trends, it can persist for weeks. So, but it looks like this is what we're setting up. We're setting up the next minor momentum peak in price and breadth. Now, if breadth were to close somewhere 1800 plus or above, it would be a reset in this, and it would imply even more time spent net going higher. So that's something that we'll be watching very, very closely over the next few days. I don't think today is going to be that dramatic top. When you have, we have a couple of gaps in here. Today is going to be another gap up. I don't think we'll go higher at this rate of change. So sometime beginning today, tomorrow, you should at least see a more two-sided trade on a day-to-day basis. Let's take a look at some other stuff here quickly. If I can find some other stuff here quickly. Here we go. All right. These are bonds. Let's go to notes. I'm going to use the continuation charts today. So it looks, this is a very important level in notes. We spiked below this level. Now you're getting a little bit of a bounce. This is a very, very, very persistent downtrend, very, very persistent auction. You've had relatively small retracements. You got to give the benefit of the doubt to the downside in this market. Again, if you're playing catch trying to catch the falling knife. The guideline is the previous day or the second day back extreme. Gold. Gold is sort of mired in chop and churn in here. Conviction is higher at the moment, but gold needs to get above this recent pivot high, and then it has work to do. If it gets above 1837, then it could really accelerate. It needs to hold 1745. If it gets below 1745, it opens up an awful lot of potential downside. The dollar is coming in. I would favor shorts in the dollar against today's session high, but there's a lot of downside volume on the horizontal scale. The longer term trend in the dollar has been up since the middle of the summer, so just be aware of that. Crude, you have to favor longs in crude. Crude is in an initiative move higher. And yeah, it's two-sided on a day-to-day basis, but time regulates price, so that's why you see more two-sided on a day-to-day basis. That's what I'm referring to in terms of the stock market as well. Guys, have a wonderful day.